Welcome back, ladies and gentlemen, to the All In Crypto podcast. Today, I am excited and delighted to be joined by Ben from the More Crypto Online channel. Now, since we last spoke to Ben, he has really branched out and he now has a More Forex online channel and a More Trading online channel. And we'll leave links to all of those in the description. Ben's been on the show previously. In my opinion, Ben is one of the best Elliotticians about, and certainly when it comes to the cryptocurrency market and applying Elliott wave theory to it, probably the best Elliotician that I've came across. So welcome on board, Ben. It's an absolute pleasure to have you here.
So hello, thank you very much for having me. Yeah, great to be back, and thanks for the kind words.
Yeah, no, you absolutely deserve them. Elliott wave theory might be a theory in regards to approaching the markets that some people may be unfamiliar with. Of course, this is going to be a very heavily technical podcast. So for those of you that are listening through Spotify, Apple Pod, or whatever it may be, do bear with us. We'll try and sort of make things as verbally understandable as possible as we go through. But for those people that perhaps aren't familiar with Elliott wave theory, I think a good place for us to start before we dive into the charts is to sort of give a brief explanation in regards to what Elliott wave theory actually is.
Yeah, so I mean, Elliott wave is pretty much a system to analyze markets. It's a system to understand the market structure. It's certainly not a crystal ball. You know, a lot of people use it like a crystal ball. It's not that. Is it perfect? No, it's not. But it's probably the best system we have to understand markets and to understand the market structure. So essentially, markets are moving in certain, you could say to a degree, predictable patterns, and they all it comes from herd mentality or herd psychology, mass psychology. So a lot of studies have found as well that people always behave in different way, in similar ways, you know, and this kind of is based on human emotion, how people move together. People want to, you know, be in packs when there is uncertainty. They want to be together rather than alone, and so people follow others, and that creates these patterns on charts. And from an 8-wave point of view, we're always looking for the so-called 5-wave pattern. 5 waves is a series of higher highs, higher lows, for example. It indicates the trend is up. And that 5-wave pattern is typically corrected by a 3-wave move into the opposite direction. These pullbacks then can present opportunities, and they overall create quite complex patterns sometimes, but they help us to understand the market, and they help us to understand where we can find setups in the market. They give us targets and support levels. And what I like about it, it gives us a roadmap. Of course, it's not only one scenario. So again, it's not a crystal ball, but we don't want only one scenario. It's like playing chess. You don't want to be prepared only for one scenario. You have to prepare for different scenarios. But Elliott wave helps you to do that, because if one scenario fails, you have a plan B.
Yeah, I love that. I think people do often take technical analysis and certainly technical predictions as a 100% guarantee that something's going to take place. And I don't really think, or it doesn't work like that, period. Essentially, I think, and this is why I'm really excited to sort of have you on the show as two technical analysts that have different approaches towards trying to increase our probabilities of being right on the market. When we look at technical patterns, really we're looking at things that have played out previously and led to a certain outcome. And I think the interesting thing there is if we can increase our probabilities on what might come next, it doesn't need to be a crystal ball. That gives us an edge in regards to the markets. You reach that through Elliott wave theory. We look at more traditional patterns. And the interesting, which I'm sure you also pay a little bit of attention to also, the interesting thing with Elliott wave theory and this kind of 5-wave structure, actually you see it not just in Elliott wave theory, but across the board. You know, if you look at like a falling wedge, they'll often have 3 sort of impulses, big impulses that have 5 kind of wave motions. It's quite a universal thing. And you mentioned that it's related to psychology, which I think is just, you know, fascinating. Human beings do human things, right? And we often see that represented in the market. So now that we've sort of given a bit of an overview in regards to Elliott wave theory, I'd really like to dive into some charts. And as this is a crypto channel, I know you venture far and wide outside of the cryptocurrency space and you're spectacular at it. Let's maybe start with the king of this market and take a look at Bitcoin on a weekly time frame and see what your opinions are in regards to technically, from an Elliott wave theory point of view, what you're looking at and paying attention to.
So on the Bitcoin chart, this is our long-term chart. I sometimes show it on YouTube as well. And I can't remember when we've been here before, right? We've been here together before.
Yep.
I think it was end of 2023 or so. I can't remember exactly, but I think that we at the time, I think we were hovering around sort of just below 30K, maybe, if I remember correctly. Might have been. And the idea at the time was that we were looking at this sort of pre-breakout patterns. We were waiting for that surge in a third wave. So I mean, this is
Yes.
the overall time frame, bigger picture. So I don't want to make it too complex, also for anybody who doesn't have the chart in front of them. But I mean, there's a significant swing low in 2018. That was the end of the bear market back then. Strong bear market after the 2017 bull run. Price bottomed around $3,200, and I see this entire cycle that started then as a 5-wave pattern. So I know a lot of other Elliott wave analysts see it differently. I know some who see it the same way, and I count it really well as a 5-wave move. So this is what I see as currently the bull market. So pretty much it's a 5-wave cycle. It's kind of decoupled from the traditional, you could say, 4-year cycle in Bitcoin. I'm observing these. I'm not primarily following these though in my analysis. So I follow rather the Elliott wave pattern. So it might be a bit of a difficult or different view for some people to sort of take on board or consider. But my idea is that the rally from that 2018 low, we had a so-called first 5-wave move up. So that was our wave one, circle one. Then we had a deep pullback into the March 2020 lows. That was the crash back then. Obviously related to a degree to fundamentals, but the correction already started way before that, as you can see. So that was just the last catalyst in March 2020. And interestingly, Black Swan events, people talk about that and say, oh, disaster. Actually, that was actually the catalyst probably for the market to turn around. Quite interesting. So after March 2020, obviously, we had this surge, which I see as a third wave rally in a larger 5-wave pattern. This is also the explanation why the last bull market in 2020, 2021 felt so different. Different. Because a lot of people say that this bull market is it doesn't feel like a bull market. And the reason is, from an Elliott wave point of view, this is the third wave. And this is normally from a sentiment point of view, it's the FOMO wave. It's where people feel FOMO. It's where everybody's like euphoric. It's where people have the fear of missing out. They chase everything. A lot of people were in the market. And that's the third wave, because in a wave two, people are scared. And then the market moves up and people panic sold, whatever, and they have to chase. And that's typically what generates the sentiment. So it's like it's just sort of, it's like it just continues. It's like an avalanche, just obviously to the upside. But in this case, this was the third wave. Then we had a fourth wave pullback into the bear market lows 2022. And now we are in a fifth wave. And from an Elliott wave point of view, and that's my thoughts, at least, around why a lot of altcoins aren't performing so well in this bull market, is because obviously Bitcoin is leading the way, right? Bitcoin is sort of the leader in, it tells us much about the sentiment in the entire space. But from an Elliott wave point of view, this is a fifth wave to the upside. It's not a third wave anymore. And in a fifth wave, the sentiment is different to a third wave. So where in the third wave, it was very, aggressively bullish, you could literally buy any altcoin and it went up. But this time you have to be more picky, because we're in a fifth wave. We're pretty much at the end of a large 5-wave move, which means, from my point of view, the next bear market is actually around the corner. But we still should get one more rally to 100K, 120K maybe, before then a major top form. So I see Bitcoin potentially still doubling. But in contrast to what many other people think, I think I see it rather at the end of the bull run already. And the fact that we're in the fifth wave explains why a lot of the altcoins aren't performing, because it's just different sentiment. People aren't that euphoric about the market. And I think they will get there in end of wave 5, but that's typically when the market is already getting exhausted, and then people will be surprised by the next bear market. And I think that could be a major one, but it will not be without opportunities. So what I see as well in the next bear market after we've topped there, so that could also be when a lot of altcoins get their major rally, hopefully, okay, mini altcoin season, or hopefully a more substantial one in this fifth wave here. But then I see this as probably a sort of flash crash, possibly. That's what I see right now, as my opinion. There could be a rally in a B wave in the next bear market. Yeah. So buying this low could be an opportunity, after that flash crash then, which, hasn't started yet. Logically, we need to finish the bull market first. But then there could be a rally in what we call a B wave. B waves can even go above the high of the previous run. So I think what might happen is that this B wave could overshoot, and people will think about, we go to 500k now, and actually this is part of a corrective rally in the bear market, and then we go down, and only then we will recover to 500k, and long term I see 1 million or more for Bitcoin actually. So that's my view.
Talking about the B way there, you can kind of see in regards to your forecast similarities with what happened at the top of that 3 wave. So I remember the sentiment. We got to 64k, we pulled back, and then we pushed to 69, and everyone was right. That's it. Prolonged cycle. It was fully back on, only for that just to be a B that ultimately led to a C. So I can see how you're sort of similarly playing out that scenario. And
I think though the bear market might be more substantial than the previous one, because it's, from an elite wave point of view, it's a larger cycle. So it's a larger wave degree. So it's the completion. So this bull market with the next high probably on Bitcoin, it is the completion of a 5-wave cycle that actually started in 2018. So it's going to be where the previous wave 4 just corrected this 3rd wave up into 2021. This has to correct the entire move up. So it's going to be a more substantial, that might mean maybe longer time-wise, or lower. We will have to see. This is difficult to say now, but in wave 4s, we often see these overshooting B waves. So that could be, as you said, something where it happened previously in that 2021 top. People were looking for 100K then, and it will catch a lot of people out. I remember when I was already talking, it's all on YouTube, but we were talking about the bear market already, I think in January 22 and December 21, but people didn't believe it until we broke below 30K. So that's how sentiment works. It's quite.
Yeah, no, what you're putting forward, it's very brave in regards to actually you're largely going against the consensus in regards to how long this bull market is going to last. I think most people, human beings, are a bit like dodos. They follow one another, which is why somebody like yourself with a critical technical insight is important, because you're kind of flying in the face of the Bitcoin 4-year cycle theory, the things like liquidity cycles. There's lots of confluence in cycles, and this is why having an Elliottician on the show is so important, because you're an Elliottician. You go by what you see on the charts. The charts don't lie, and the method that you've had an amount of success with. So when are we sort of, in your opinion, do you think we're looking at this bull market ending? This is obviously a lot shorter than previous 4-year cycles, and essentially would throw out the 4-year cycle theory from here on out.
Yeah, I mean, the 4-year cycle, from my point of view, that 4-year cycle, it is a theory, right? But how much data do we have, right? So it's like you can't really build a trading strategy or anything, or predict anything just because it happened not even 5 times before. It's just like we had only so many 4-year cycles, right? So really, really limited amount of data there, and it's just not reliable. So I'm of course watching it, but the 4-year cycle theory it's already a different cycle, because we had an all-time high before the halving, right? So that already is different. And I think it sort of already proves that things are different. And I'm just following the human sentiment patterns. I mean, is it perfect? No. And am I going to confirm a bull market top without evidence? No. So, if I see evidence along the way that it's going to be more bullish, that's the advantage. The patterns will tell us. So we will, if we get up there, to 100, 120K or something, and the market still shows strength. I mean, I'm not going to tell people to, we're going to go into a bear market. I will definitely raise caution, awareness, but it's about the market still needs to confirm, through a break of the first support levels or something, that something is changing in sentiment. And it could be that this 5th wave just gets extended. I mean, this happens, it happens. That therefore this is what we see right now. But if we get there and the pattern is only the 5th wave should also be a 5-wave move itself. So it's all about the fractals. If it only forms 3 waves and we add 120K, maybe we get one more high to 150K. So so that's where we track support levels, and we just try to stay in the trend as long as possible. Elite Wave helps us to understand when the trend breaks as well, and where the risk is. And when the risk is very high, it just generally makes sense to take profits, even if we haven't broken support, because at some point you will be so far away from support, then every trader has to decide, or investor, do I want to wait for the market to decline 20% before knowing that we break support, or do I rather take profits now or partial profits? So that's
Yeah.
the great thing with Elliott Wave. It tells you always where the risk is, the risk levels, and if we're too far away from that key risk level, then everybody's different. So some people might say, okay, I'm happy with that. I'm happy to accept that drawdown. But oh no, I want to capture those profits. I'm not happy to let the price go down that much to get that signal that things are changing. So
Yeah, and I think certainly, having something a little bit concrete, a little bit solid to put your feet onto when it comes to looking at the markets, Elliott Wave theory certainly offers that. In regards to when a trend changes, I take it you just look for a break in sort of trend structure. So if it's an uptrend, you'll look for a low to be taken out. And in regards to the danger zones, do you use fibs to predict that? So once you run a certain fib level, that's when you're sort of, I'm just speaking of what I think you might do. If you run a certain fib level, let's say you run your 618 or something, then you're going to sort of say, okay, now we're in danger of a total retrace of this move. Is that kind of how that works?
yeah, there's a layer of levels. So there will be a very first level where we get a warning. So that might be just on the micro pattern, but just because a micro pattern breaks doesn't mean the whole trend is finished. But it will be, okay, now I have to be watching. Some people then might choose to take profits. It's an early signal, but it's not so reliable. So there are key levels like invalidation points plus, so they will invalidate the pattern, and then typically Fibonacci support as an additional layer. There are other things like price channels. They are not so reliable, like trend lines and so on, RSI as well. What is the most reliable signal is if we get a 5-wave move down, because the 5-wave pattern to the downside, especially if it breaks support in 5 waves, indicates we were breaking support. So the trend to the upside is somehow finished. And I get the additional signal that the trend is now down, which I get with a 5-wave move. The problem in crypto is if you wait for that signal, and sometimes you get these flash crashes, and people they will be surprised and they wake up one morning, it's crashed like 15, 20%. It's too late to sell often, right? So that's why I'm always, I always highlight those key levels, and then people need to decide for themselves, okay, we are so far away from that key level now. What happens if it breaks down and you get the flash crash? So when the risk is high, it makes sense to take some profits. It just does, but everybody's different. So that's where sometimes things move so quickly in crypto. We know that, right? It's just, yeah.
It's volatile by nature, isn't it? I don't even trade crypto anymore. I only invest from a purely spot point of view when it comes to crypto. I'm happy trading the Forex markets. We're currently long GBP versus US dollar. And of course, we've been in that for a while, and Euro, US dollar. We're also short things like oil. I'd rather trade equities, larger equities preferably, and maybe commodities if it's a large enough commodity. You don't want to get stuck in something like a hog's futures or something like that. I'm sure you then that can be as volatile as the altcoin space and the Forex market. Crypto for trading, for me, my risk management, I just find it so hard to sort of stick to it. And you're in, out, in, because this is crypto, right? You can get a day where an altcoin moves 12%, and it can be quite a large altcoin. It's very hard to, better than me probably,
Altcoin trading is a different game.
And I know a lot of people that I admire and I look up to, that I've sort of studied under, and even with their 40 years of experience in the markets, when it comes to crypto, they're just like, I'm not playing this game, which I think can be quite smart advice if you don't know what you're doing. So interestingly, when we look at Bitcoin, are we seeing similar things in regards to the total cryptocurrency market? Is that, as traders, we look for confluence, multiple signs, whether it's your fib level getting ran, your lower or high low getting ran in regards to looking at a trend breaking down. We look for confluence in the markets. When we look at Bitcoin and we've got that sort of a forecast, do we see a similar thing in regards to the total cryptocurrency market? Are we seeing similar things there?
So my view is, you might see, you should see the crypto total market cap on the chart. I mean, I always say with these market cap charts, they are not really, because they're not tradable as such. So Elliott Wave doesn't work that well here. It's not, you don't trade the market cap, right? You can trade Bitcoin or the individual altcoins, but still you can identify tendencies. And I mean, my view is especially the total market cap chart really follows the Bitcoin chart. I mean, this is pretty much the Bitcoin chart. It's also on the Bitcoin chart. I'm looking for one more high, as I just said. We might see more. Okay, so you can always say, okay, maybe it's extending further. That depends on. I mean, it's a question like, how do I, for example, interpret the first rally, right? You can get these so-called nested, like a series of 1-2-1-2 structures, then it would sort of move up further. Don't want to get into that now too much, will make it too complicated. But overall, it pretty much mirrors the Bitcoin chart. There's sort of this Fibonacci support area to which the price, not the price, the market cap reacted to nicely between 1.62 trillion and 1.83 trillion USD. And if there is another rally, it could certainly take us towards, like, I would say minimally 2.96, but probably rather 3.65, maybe 4.15 trillion. And that could pretty much be then when Bitcoin tops as well. So this chart is probably likely going to follow Bitcoin for quite some time, or it's just because Bitcoin is still the leader in the market, right? So it's pretty much that sentiment, because Bitcoin is really good indicator of the sentiment, like in the crypto market, like the S&P is for the US stock market.
Yeah, and of course, Bitcoin's 60% of this chart. Let's maybe take Bitcoin out of it and look at total 2 and see if there's anything there that maybe looks a little bit different. I mean, it's still broadly, like you say, going to follow largely, isn't it? But I don't know if you've got any sort of work on this.
So
I can see
similar.
a massive 100% level in the sort of 20 trillions there. I don't want to force you into saying that everything outside of Bitcoin is going to 20 trillion, but maybe just walk us through this chart.
Yeah, I mean, this is I would say a bit less reliable. It looks a little bit like I think this actually follows my Ethereum chart. So, which kind of makes sense because it's excluding Bitcoin. Okay, what's next? Like Ethereum and a lot of the coin. Obviously, this is sort of less, let's say, less chart history, but I already see a possible 5-wave move up actually. So I already can say we have a wave 1, we have a wave 2, we have a wave 3, 4, 5. But looking at the micro patterns, I'd actually say this is where we would get now too much into Elliott wave specifics, but it's pretty much a diagonal pattern where the third wave is an ABC structure, the fifth wave as well. And I see this here as an A wave, which was the top in 2021, then the B wave correction, and now we could be in the C wave. But this is where it's helpful to understand the different patterns in Elliott wave. So not all patterns are reliable. So if I'm tracking here a so-called diagonal pattern, this is just not reliable. So I would not be surprised, in other words, if it breaks down early. The current trend is clearly up, so we're still forming higher highs, higher lows. But similar to the Ethereum long-term chart, I don't fully trust it. So there is always going to be an alternative. Like, for example, if we don't finish this rally here in the third wave to the upside, we might get to 4.5 trillion, which could be a reasonable top in this cycle, and it would be a long-term top. Again, this chart is probably going to form a top. Also, for anybody who's not has the chart in front of them, this is also only like forecasting like one more high on the long-term chart before we then get a major correction, which fits in well with a Bitcoin chart where we could head into a bear market, you will see it on this chart as well. You will see it on the total 2 chart. Also here, long-term top after one more high. And I mean, there can always, it could always be that we've topped already in maybe an alternative scenario, and then this was the top in 21, and it's now already, it's just sort of forming a corrective pattern, and we go down further, and it will recover then. So that can always happen, right? But at the moment, there are always key levels. So the wave 2 low is now the key level. There will be some Fibonacci support, but as I said, on these market cap charts, they're not so reliable. I would have this as support, which is between 605 billion and 796. So as soon as we go below 605, it's going to be difficult for the bulls from a sentiment point of view.
You're seeing similar things across Bitcoin, total 2. And I think certainly when I look at the market, I'm still very much on the side that we're going to maybe go into the back end of 2025. However, I do also ask myself the question of, is that just too obvious? Right now, if you look at the world, and the beautiful thing is technicals, in my opinion, you'll get the event after you've seen technically what's signaled. So if you're predicting downside for the markets, there's likely going to be some sort of an event or something's going to happen that the charts are showing you well before we even know what it is. Just like with that 2-wave of course, we're talking about the March 2020 crash. Okay, you were already correcting in a two-wave manner, but it's very interesting how it's still, you can still apply technical analysis to it, and it's complete. It's whole. It doesn't. It's almost predictable in regards to that fashion. When you talk about the altcoin market, so I take it this term alt season isn't in your sort of forward vision at the moment, because if we're looking at Bitcoin running out of steam a lot quicker than people expect, going to 130, something like that, maybe sort of around the sort of entering of 2025, does that mean you don't think an alt season is going to happen, or do you think it's going to happen? It's just going to be more sort of short-lived?
I think it's going to be probably different to what many people believe. I think it will be. We have to be much more picky. I see certainly the potential. I mean, in that fifth wave that I showed you on the Bitcoin chart, this last rally, that I see as pretty much, I think, the last opportunity in this bull market for it to happen, right? That maybe Bitcoin is getting exhausted because Bitcoin already rallied in the third wave in this, after 2022 low. We have a wave one, we have a wave two, we have that third wave, which topped in March this year, fourth wave, and Bitcoin should get a bit exhausted in that fifth wave. So there are coins which could still rally in, let's say, what would be a third wave, which would be a C wave impulse. Again, I don't want to get too much into the Elliott wave specifics, but there are coins which are setting up potentially for a rally that could then, where they could catch up to a degree. And that might be an altcoin season, maybe just a mini altcoin season. Now we know with these altcoin seasons, they can be over in weeks. It might just be like 4 weeks and then it's over. So people one day will wake up and then it's gone up like 25%. Then you get that for a couple of weeks, and then people will wake up, want to join the market, and that's when we top probably. That's where there are these charts when they explain in which wave, Elliott wave, what's the sentiment, and we typically say that like towards the end of that fifth wave, there should be some euphoria. People will be very, very ecstatic really about the market. It can't go down anymore and things like that. Might be when we break 100K or something, a lot of people will enter the market probably. Now, again, I did say that when we made a new all-time high on Bitcoin, and actually it didn't really happen. So you don't see that influx of new people, I think, this time. But again, that you can explain that with the larger fifth wave that we're in. It's just different kind of sentiment. But it's, I think it could happen when Bitcoin rallies, takes the next route up. I think a lot of coins a lot of coins are currently in support areas. Now, most altcoins show very messy patterns, I have to say, from an Elliott wave point of view. So they're not confirming at this stage they've bottomed or anything, but a lot of them are in support areas, and they could certainly, I mean, the correction started in March for many altcoins. So they could be preparing for that move. And they could be more aggressive than what we see on Bitcoin potentially.
It's very interesting, isn't it? Like I say, this is why it's really invaluable having you on the show, because it offers a different perspective to, I think, what most people are following in regards to expecting, a year plus of good times ahead. And when you look at what I was going to say was, when you look at the sort of world right now, there's many things that could cause perhaps a shortened cycle or things to kind of go out the window, if you will. And I think that's very interesting. This is certainly something we're going to, you can imagine we start to top out like what Elliott Wave has us. I'm sure this video is going to be doing extremely well. Let's maybe refine altcoins. You say altcoins are very messy. Shall we start with the king of the altcoins? If you've got anything on Ethereum, you mentioned that you weren't really trusting Ethereum. Could we explore that a little bit?
Yeah, so we can take a look at the daily chart for Ethereum.
By the way, for anybody who is interested, Ben covers, I'm sure, Ethereum's in your regular routine, right?
Yeah, quite regular.
Pretty much. There's links to Ben's channel in the description. Go and check that out. He covers Ethereum and many other altcoins, including Bitcoin and the Forex market and everything. We'll leave links to all that in the description for anybody that's interested in following him daily.
So, I mean, again, I just showed you that total 2 market cap chart. It looks quite similar. So on this chart, Ethereum, there will be, long-term charts, always a bit tricky. So, but my interpretation is we had from the all-time low or startup candle, we had a wave 1 to the upside, which topped 2016, wave 2 correction, wave 3 rally, that was the top in 2018, wave 4, which bottomed in 2018. And also, like similar to Bitcoin, I see this actually as a pretty extended fifth wave rally that's currently probably coming close to completion. So in 2018, 2019, that new 5-wave cycle started, which is nearly done. So I would say from an elite wave, from a risk point of view, most of that rally is done before we get the next major correction. So we're looking at wave 1 is done, wave 2, wave 3 was the top 2021. Then we had the wave 4, which was the bear market low. And we could be in this 5th wave now. It just hasn't, again, it hasn't reached an all-time high yet. Again, also here, what many people expected was Ethereum to outperform Bitcoin. It hasn't happened yet. And therefore, I don't really trust Ethereum. It's from that bear market low in 2022. It also only shows us at the moment like 3 waves up. But for a full pattern, we need 5, which is okay. It's still, it could still do it. And that would be the bull market top, in my view. Maybe around 5,700, 7,800 maybe if it's extending. But the problem is with how this pattern looks like, this move up from the 22 low, it's something that we call a diagonal pattern. It's not an impulsive pattern. And that means I don't trust it. They happen very often in a 5th wave. They mean the sentiment is not very clearly bullish. It is bullish, but not very clearly bullish. The pullbacks are very deep. There's a lot, I don't want to get into detail here, but structurally there are some problems here. And that 5th wave, to get to a new all-time high, it would have to be quite long. So, see, I'm still watching for one more high, but I would not be surprised if, for example, an alternative plays out. So an alternative could be that, this was never the bear market low. Maybe we're still in the bear market and we just get a wider, this was just all part of a correction in wave 4, and then we go up. Or maybe Ethereum will spend some time, and that all happens when we break this support area at 1800. Ethereum could spend time in a triangle pattern. A wave 4 can be a triangle. So this wave 4 at the moment in June 22, which presumably bottomed there, can be a triangle, which is possible, especially because we haven't made a new all-time high. So that would frustrate a lot of people, but it would give Ethereum the chance, once this wave 4 is done, to really, after a triangle, you often get a surge, a rapid surge, so to outperform Bitcoin then. But yeah, it's just a mess, I have to say, unfortunately. So I'm not bearish on Ethereum, but I think the structure could transform. So it's more like we have to be very, very careful here. It's not clearly bullish. So it might just give us a little bit more up and down before we finally go to all-time highs.
And there is a point where, and this is the beautiful thing about Elliott wave theory, it gives you multiple kind of scenarios that you're going with once certain things happen. So there is a point like with Ethereum where, okay, there you were looking at some sort of a continuation of the 4th wave that sets up in some sort of a pennant, some sort of a symmetrical triangle that sees that real continuation to the upside. At what point would that go out the window? Once you take the high of this previous pullback, or once you take the start of wave 4's, because that kind of confirms that you're on that 5th wave, right? Once you take the high of wave 4, at what point do you flip and say, okay, now we're expecting more out of Ethereum than we previously were? I actually agree with you in regards to being suspect of something until it gives you reason to not be. I think that's a very smart approach that most investors should actually apply. Until something shows you it doesn't give you that cause for concern, go with the cause for concern. At what point do you flip on Ethereum and start to look for something different to what you're expecting?
You're from a bearish point of view or a more bullish point of view?
So perhaps a more bullish point of view. I think a bearish point of view you outlined perfectly there in regards to this being, Ethereum's still in the bear market. That bear market low on the back end of FTX wasn't the low. It's still got a further downside to come, or it going sideways in a wave 4. What's that? The bullish scenario right now is, okay, we've still got that 5th wave to come. You're a little bit skeptical of it. Yeah. At what point does the baby kind of get thrown out with the bathwater and we start to look for, okay, things probably aren't going to top out in the sort of Bitcoin timeline. There's a more bullish scenario on the table for Ethereum.
So I think probably 2 things need to happen. So at the moment it wouldn't matter because I'm still looking for higher from here. And if in the end it extends, even better. But I rather, from a risk management point of view, at the moment, just point out the most probable scenario. You will find lots of super bullish scenarios, just like made up often. But essentially, what we want to see first is that it gets here. So, and if it goes above this sort of standard Fibonacci zone, 7,800, then we might need to think about something more bullish. which can always happen. We are holding support, so it can always go higher and then extend if the entire market, let's say the market, gives it a more favorable environment, can always happen. So I would need to see that it significantly breaks those Fibonacci areas, which are sort of standard targets for this fifth wave. Also, I would probably want to see on the Ethereum BTC chart, where we compare Ethereum and Bitcoin, actually an upside trend reversal. So at the moment, that chart still shows downside, and there's no sign that Ethereum starts to outperform Bitcoin. So I need to see that as well, because if until the Ethereum Bitcoin chart goes into an uptrend, there's no point be overly bullish on Ethereum compared to Bitcoin. I could just hold Bitcoin, which is arguably a bit safer because it's got more chart history, and so on. But the performance is clear. Bitcoin is still outperforming Ethereum at the moment, and this entire cycle that hasn't changed. So when those signals come in, then there could be even you could even make a case for moving BTC, some of your BTC funds into ETH. But as long as the ETH BTC chart is down, which indicates, okay, Bitcoin is still outperforming Ethereum, there's no point really.
Yeah, and I think that's a perfect place to sort of segue into, because if we are looking, so we're seeing a similar thing on Bitcoin from your perspective, total. Ethereum showing some very suspect signs, and also very much in line in regards to the scenario forecast. There's got to be a Bitcoin dominance element to all this. So what are you seeing in regards to Bitcoin dominance? Are you seeing, okay, Bitcoin rears its head, the altcoin market very likely to overperform during a period of Bitcoin strength? Bitcoin's still the tide that rises and sinks all ships. So surely you're looking at a similar thing, or it's there in regards to Bitcoin dominance. Are we looking at that kind of that drop for Bitcoin dominance only for it to resurge in more of a shorter term? Is there any kind of a wave structure on that at all? Or is it really ETH BTC? I mean, it's interesting. ETH BTC and BTC DOM, they're kind of the inverse of each other, right? They look very similar in regards to they're going sideways in a very kind of triangle, almost a descending triangle pattern. I think Bitcoin dominance is in. Whether that plays out down the line, we'll see. Is there anything on BTC DOM that you're looking at?
Yeah, so you should see the BTC DOM chart. I mean, again, also here, it's the scale is in percent, so you can really only go from 0 to 100, and
of course,
you can't really use. I mean, the use of Fibonacci support and resistance is really questionable on a chart like that, but we can still identify tendencies. I mean, what I find, so first of all, I think you could say it's a triangle. It's probably more a bit of a downtrend there. What I think is we should focus on, I think, only this section, which sort of started here in 2021 with this low around 40%. So this here, because this looks, I mean, I find Elliott wave on this is really unreliable, but you can still identify tendencies. And I see this as a corrective rally. So it's a 3-wave rally. It just has this look of an A, B, C structure. And we could be in the very late stages of a C wave rally. We're also in resistance, which is between 54% and 64%. And currently it's at 58%. So it's a 3-wave rally, and it could still stretch a little higher, but I'm just very much aware that we could be in the late stages of this. And there's a bit of a price channel there. So once this price channel is broken to the downside, I think this could be that altcoin season, right? How far is it going to drop? Difficult to say. I mean, it could very well just go here to this previous trend line, maybe even lower. But there is, I think you could say from an Elliott wave point of view, it looks a bit exhausted to the upside. So it's a channel where it's getting like very choppy, and it's not a very aggressive uptrend. So just sort of waiting for signals that it might form a top. It could still stretch a bit higher. And again, also here, I wouldn't get bearish, okay, on this until it really breaks some kind of support or below the channel, because there's a very clear trend line is following there at the moment. So it would need to go below probably like 55, 56 for a first indication it's breaking.
Yeah, I know we're certainly watching BTC DOM and very much expecting that logical support level to come back into play. We've got a little bit more of a sort of long dated for a number of reasons. One, I still think we're following the Bitcoin 4-year cycle generally. I think the point that you raise is a brilliant one in regards to how much data have we actually got to go off of. But if you look at Bitcoin from its sort of start to now, it's very much followed that. The anomaly really is Bitcoin going and putting in a high pre-halving. Some would say that's due to institutional involvement. It does kind of put questions. It's kind of like Plan Bs. We all remember Plan B stock to flow. That kind of nobody talks about that anymore, and models work until they don't. Which is why the perspective that you're given, I think, is absolutely valuable in the sense that we need to look out for this. Everyone, including myself, is kind of looking for essentially the same thing to repeat, perhaps even in a more bullish manner. There's a danger in that, because if it doesn't, somebody like yourself is going to go, okay, well, this was a scenario. It's now playing out. We're prepared for it, and we've got sort of a risk management strategy in place. Whereas a lot of other people get caught in 2022 all over again. That's not a place anyone wants to be. So I'm absolutely loving all the sort of insight that you're sharing. Are there any? So asking you a bit more of a personal question here, in regards to the altcoin space, if you're sort of forecasting a lot of what you're forecasting, does that mean that you're not necessarily playing from an investment point of view in the altcoin market? Is that something that you see is a little bit sus like Ethereum? It's not worth sort of getting into bed with because of what you're seeing technically. There might be something waiting around the corner with a baseball bat, so to speak.
Yeah, in the I often say, I tell it my community as well. I don't see the altcoins as investments. I certainly treat Bitcoin as investment. So I see Bitcoin as, I mean, it's still not a long term. It still hasn't proven itself really long term, but it's obviously in the crypto space. I mean, like, I don't know, nearly 15 years now. So it certainly has a chart history that is decent, and it sort of is a long term uptrend. I like the chart, and I like it from a fundamental point of view as well. So I treat that a little bit like a long-term portfolio asset, like I would do an ETF, like I would do it like with gold, silver coins, whatever, any sort of long-term asset that stocks, like long-term stocks, you wouldn't necessarily sell them just because it's heading into a bear market. Depends on your age as well, but it's like a long-term portfolio asset. So you balance it out a little bit. So I treat Bitcoin like that. I also treat Bitcoin like a swing trading asset in addition. So different strategies there. So for swing trading, even you can do anything with Bitcoin. But when we come to altcoins, Ethereum maybe a little bit like that, because obviously it's been following Bitcoin. But I don't trust it that much. So I would also treat it to a degree as a portfolio asset, but less so. Essentially, it's for me, it's an altcoin with a more reliable chart history. But I always say that I just treat altcoins simply as swing trading opportunities. For anybody who's got a good day trading strategy, by all means, do it. But I would not use them for investments. Now, I also have my small hardware wallet with altcoins on them. But the point is, a lot of people, they go into this altcoin sector and they think they can get rich quick, and then they buy all these coins. And as I just showed you, it's different market sentiment. And if we look at most altcoins, they don't outperform Bitcoin long term. So there's no point holding them long term. For swing trades, yes, but if people say, okay, I want to have them just for this bull market, well, you still need to watch them, because in this bull market we've seen it. Bitcoin has pretty much outperformed many of them. So there's no point just holding them without looking at the chart, without understanding when things break, when charts break, without risk management. Now, I also don't have stop losses for all my altcoins. So, but I accept that, well, they are from a position size point of view, they are like, okay, if there is this fluctuation and maybe some of them will never recover, I can accept that. The problem is many people put some of their entire wealth into this highly speculative sector. And this is where people need to be careful. I mean, I think having that portfolio to be prepared for an altcoin season, great, but it's sort of a speculative bet. Whereas I would not see them as investment cycle over cycle, because in any bear market, Bitcoin will outperform them. The risk is many of them will never come back, because in every new cycle, there will be these new and shiny altcoins, and we've seen it in this cycle, it's the meme coins. I mean, do they have fundamental value? Not really. So it's sentiment. It's sentiment driven, and what's being hyped on Twitter, and that's good for swing trading. The most recent swing trade, good setup we had in our community was Sui, the Sui chart, a really nice impulse. Really stood out, because most altcoins, they don't have this. They didn't show this kind of setup, and most altcoins didn't perform in the same period. So Sui has really performed based on an Elliott wave setup. Now, some people might say fundamentals, but whatever. There was a setup, so there were clear levels and parameters. But yeah, I still wouldn't see Sui as an investment, right? It's a swing trade opportunity. Okay, you've made money with it. At some point, the risk is very high. I'm looking for the next setup, so I'd rather treat them like that.
Yeah, no, I think that's really, really good. A good sort of overhaul. Everyone's risk scenario or sort of own personal situation is very different, and you need to treat it as that. And I think with the crypto space, we're very kind of in awe of this get rich overnight world that actually can often not be the case. I mean, I am irresponsibly, from an investment point of view, long the cryptocurrency space, certainly some of the altcoins that we speak about. But you've got to remember, I'm young enough where I can fully accept losing absolutely everything, pick myself up, and you know, it's horses for courses. And I think that what you're saying there is really valuable. You know, there's a greater degree of uncertainty with the altcoin space than there is really any other investment field. And if you look at the nonsensical nature of meme coins, you know, where do you go with that? How can you treat that as a kind of investment? You know, but then again, it's an interesting world that we live in. On the topic of altcoins, Ben, are there any kind of altcoins that you're a little bit more fond of at the moment? You know, we like coins like, from a fundamental point of view, Hedera. We obviously like coins like ICP, coins like this. Are there any altcoins that you look at and you go, okay, that looks, you mentioned Sui, better than the rest in regards to where they currently are?
So yeah, I don't look at them from a fundamental point of view. So I really only look at them from a technical point of view. You know, sometimes these overlap. So some people might say, okay, really good fundamentals, and then if it hits an Elliott wave setup, great. And if the hype comes in, so yeah, had you asked me like a few months ago, Sui was really good. Now Sui has rallied already. I think Sui still has a really good chance to continue. So pullbacks might be opportunities. On the Sui chart, I could just to give an example, just open the Sui chart. Because that is one that is really showing, and we haven't seen many of these patterns. It's really shown a very clean impulse structure, which has been very rare in the altcoin sector in this cycle. So the setup was, we've seen from this low in August, really a proper impulsive structure. There are certain rules to these structures, no overlaps and everything. Worked nice. We have a 3-wave corrective pullback into the September low, and now it's sort of getting to the target. So, you know, I would say most of that rally is probably now done. You know, okay, it should still go higher, and you know, but you need to follow that chart now closely, because again, the chart history overall is too short to call it really a good investment. It's just an unreliable altcoin chart, which is at the moment reliable, but if the first support levels break, I would not like this chart anymore. So it's very temporary. Another chart that I find shows potential at the moment, at least from an Elliott wave point of view, is Rune, for example.
Thorchain has been unbelievably strong so far, and I'm sure most people, if you asked them what Thorchain was, they couldn't tell you. You know, there'll be something fundamental behind that, I'm sure. But I don't know if you want to maybe take a look at that chart. What are you sort of seeing in regards to that?
So there is this long-term chart which I find, I don't believe it, but you know, because it shows us that Rune could certainly get to $100. Okay, so that is possible. Oh, wow. Now, the reality is, I think when Bitcoin puts the bull market top in place, it doesn't matter where Rune is on this roadmap, it will break. So that's why I say, you know, altcoin charts, you can use them for swing trading, but they break often because there are these correlations in the space, and let's face it, most of these projects are just experiments. So the fundamental value is questionable to a degree. You know, there are fundamentals, but again, it's still a very new space. So it's not like, okay, you know, there's a company with cash flow or something. Well, there is in the background maybe, but we don't know that. It's not like a stock where they have to be transparent and everything. So, and it's certainly when you buy one of these, you don't own a part of that company, right? So they're different from a fundamental point of view. It's exciting and interesting, but we always have to know there are these support levels. They are not, you know, they're not set in stone. So they will move with the price, and they will change based on what the chart is doing right now. I'm always saying, like, we need to take a look at the chart today. What is it doing right now? Are we holding above support? You know, there's an opportunity, but I need to know when I want to stop out. But there is potential, you know, for it to go to $100. Now, it's important to follow the short-term patterns, but also the short-term actually looks quite interesting at the moment. So this is one, I think, together with Sui, these have performed quite well, and they still can. There are some others, like some of these
Solana, maybe. I mean, that's been a great performer so far. You know, you've got some like Near. You know, there are some that I think have been quite strong thus far. When you do look at the majority of the altcoin space, it's really still, you know, we're not seeing what we've got here on Solana. I mean, this was just unbelievable. I missed a long at 17.
Yeah, absolutely.
Again, one of the reasons I don't trade at 17 dollars. I literally capitulated only for it to go on the run that it's gone. But that's trading, that's the frustrating game of it. But are we very much looking at a similar thing in regards to Ethereum here? You've got that sort of last fifth wave, that last sort of puff for air before you. Yeah.
I see one. Ideally, I'd like to get one more high. Now, I have to say, from an elite wave point of view, for traders, the third wave is typically what you want to trade. The fifth wave is nice to have. So it's where people see this and say, okay, we have to get this fifth wave, go all in. It's about most of that rally is done, right? The risk is now quite high. We might get that fifth wave, ideally. But main element is already done. But long term, after this correction then, which would probably be the next bear market somehow, I really see it could outperform Ethereum going forward. It could really do something significant long term. But yeah, I think Solana still has a chance for another rally. Quite a stable chart, has done really well.
Have you looked at the Sol BTC chart? Because Sol BTC, in my opinion, it kind of looks like Sol's going to really want to reach against Bitcoin in regards to where it's currently. If you look at Sol's market cap, I know there's, it's not something you can trade. You can trade Sol BTC, also Sol ETH. I think they're very strong charts that, to me, you probably might see it from a totally different perspective. But certainly Sol BTC, Sol ETH, you can see looks maybe a little bit toppy, but it's often the case when you run into resistance.
It's looking positive. So whenever we're looking at an altcoin chart, I would always say, before considering really, I don't know, maybe for swing trade, that's one thing, but to take it a bit more seriously, compare it with the BTC pair. So there is no point, for example, when Bitcoin is still outperforming that altcoin, why would you buy that altcoin, right? Bitcoin is still outperforming. So here we actually have the situation that Solana has been outperforming Bitcoin from 2022 and could still continue a little bit. It looks a bit like a bullish pennant or something, right? Could still continue. Yeah, so it's an uptrend. But if you look at most, just BTC look at pairs. I don't know. Yeah, just look at, I don't know, it's like
AWBTC or something. Yeah. I knew you were going to come to that one.
Which is not that bad, but it's just a sideways range. And there's no uptrend. So why would you?
I looked at this recently. I said, when you look at the ADA-BTC chart, it leads you to believe that this isn't going to be ADA's market, but it could set up some sort of continuation well into the future. Talking about when the next bull. But it's very kind of hard to speculate on that from where we currently are. Just something to watch, moving forward. Yeah. I don't think it's going to be a shiner within this one. I interrupted you there. You were going to look at another altcoin. I believe it was Link. Were you going to type in Link, Chainlink?
Link shows also still a somewhat promising pattern. It hasn't given us clarity that it's actually bottomed in this support area, but it could. And that's why we talk about maybe an altcoin season, also get to maybe $70, $100. So that would be something that I'm still watching. So there's a good reward to risk ratio there, certainly. Again, with Elliott Wave, there's always going to be an invalidation point, but it's about, okay, when do I want to get out of the market and what's the potential? So I get my reward to risk ratio, and it's, after that correction that started in March, it's certainly giving us a decent reward to risk.
Certainly if Bitcoin sort of pops its head up, where are you at on the short term for Bitcoin? Are you looking at this correction being, it's very much in a broadening sort of wedge pattern that it's been in since March? The altcoin market's largely just given up under its weight. When you look on the small time frame for BTC, are you sort of looking at some sort of an end to this pullback? I think there's a number of promising signs, perhaps. Certainly some altcoins look like they might want to go on what you're looking at as a fifth wave now. I think Bitcoin's going to permission that largely.
Yeah, I think there's a lot of uncertainty there at the moment. So these fourth waves, so this is a fourth wave which started in March. It's a range. We pretty much haven't made any progress since March, right? So it's just in time. So the market has been correcting this rally since March. And from an Elliott Wave point of view, this is all corrective. So we're just up and down in a range, not really any progress. There is, and part of that might be, the US elections are around the corner. So maybe we won't really see a resolution here, any outcome until that's happened. Because my view is there could still be this rally to a new all-time high. The only question is this wave 4 already done? Did it form a low in August? Or do we get another low? I'm slightly leaning to the idea maybe we've bottomed already, but it would have to hold this support area. Therefore, at the same time, this support area, which goes down to around 55.5K, if we dip into that again, it could be an opportunity for higher prices, and then we could do this. So for me, it's quite simple. So as long as we're holding that upper support area there, I'm rather looking for higher in a more direct move up. Any dip into that support area could actually be a swing trade opportunity. Okay, if we break below it, then alternatively, there could be a swing trade opportunity from here. But the thing is, if we go down that much, I think there will be quite a bit of panic in the market, mid 40K region. So what I would want to do before going long or something, I would want to see on a smaller time frame a setup here that tells me this correction, which is quite significant, is actually really finished. So because if we go down that much, it's close to breaking into the bear market, into a new bear market already earlier than expected. So that's why if we break this upper support area, that will be a warning. Breaking below 43K opens the door really to either we never finish the bear market, or we are already in the new, probably we never finished the bear market because it never finished a proper 5-wave pattern to the upside. So, but yeah, that's not expected at the moment, but we still obviously, the market can do anything. Is about understanding what's currently probable and what are the risk levels. And yeah, but I slightly prefer here this more direct move up. So
we'll see. Yep. I think it's a great approach to take an approach of, okay, well, it's a probability-based game, I think, and what's more probable you go with until it's not, I think that's a really good method to sort of stick to. And I've got to ask you, I mean, we've covered quite a few altcoins there. There is a correlation between Bitcoin and the stock market. There's obviously areas where it's not being correlated. I think more so there's a correlation between Bitcoin and the dollar. We're kind of bearish on the dollar, certainly over the midterm, despite the recent rally that it's had. What are you seeing when you look at the likes of the S&P? Okay, so let's sort of run this back a little bit. We're looking at Bitcoin doing that fifth wave potentially, providing it can do what we've just looked at the smaller time frames, topping out around about 2025, going into 2025. The dates, I'm not going to ask you for the exact time, minute, and second like everybody wants, but it's just impossible. Do you have confluence in regards to what you're looking at with the S&P or the stock market more broadly? Are you expecting more of a broad market downturn, or do you think it's just going to be crypto specific in regards to what may be to come?
So I don't see that correlation really. I mean, the S&P has gone to new all-time highs, and Bitcoin has just been correcting since March. So I don't really see that direct correlation at the moment between these two. I mean, this is my monthly chart for the S&P. I mean, I'm very much watching for potentially a long-term top here to form. And I think there could be a disaster bear market around the corner. Now, it's not started yet, and I don't want to create panic or anything, but that, from an elite wave point of view, we've seen this rally from the 1932 low, long term, which is nearly 100 years, right? And that's a 5-wave. I mean, if that gets corrected, I mean, then yeah, we've in our lifetime we haven't seen. We probably will never see a correction like that again. So this would be a disaster. Now there are enough things happening in the world that could be a catalyst, you could say. Also, this if it happens,
like the yield curve. Sorry to interrupt. You got things like the yield curve. These are all. This is what I mean. The scenario that you're putting forward. We're technical, right? Fundamentals are always secondary, really. But there are a lot of fundamental things that could see this technical prediction. There's landmines all over the place right now, not to mention the uninversion of the yield curve. There's a defo correlation talking about the 2s and 10s between that uninversion and a storm coming, and that's what I really like. I'm finding that very interesting in regards to what you're showing here.
It's more about understanding the risk. I mean, predicting it maybe to a degree, but I wouldn't say it started yet. So what I would do from a tactical point of view is I wouldn't short this now because we're in an uptrend, but I would be cautious. So I might reduce my stock exposure, or from a short-term trading point of view, we're still up, right? So we are still in an uptrend. But if I look at this, we've been really in a nearly unprecedented uptrend here from the 2009 low, and specifically from the 2022 low. There hasn't really been any deep pullback since then, so I think it's overdue. We are also approaching this long-term trend line on the monthly chart, and I'm definitely, whenever I see, and I haven't seen support levels break from a long time on the SPX, but once they break, I think this is, be careful. And even if it's just another 1-2 setup or a more bullish alternative, either way, that first crash there is a good opportunity to buy. Like similar to what I mentioned on the Bitcoin chart, when we get the first crash, that would be interesting, that A-wave correction, to buy it, because it could be something more bullish, maybe. But at least this B wave could also, again, overshoot. We're dealing with a large wave four. So you see some parallels to Bitcoin there, maybe.
Yeah.
Where I showed on the long-term chart, Bitcoin could head into that major wave four. Will it really be decade long? I don't know, but it would be a massive bear market. Now, even in that bear market, that B wave could create an opportunity, right? There will be stocks that rally. It's not like everything is going down, but it will be different. Yeah, it will be a different market. I'm kind of, the problem is I'm getting, because this wave four of this magnitude, I think it would have a major impact on banks. It would society. It would affect a lot of sectors, and it's not great. It's not
Could
great.
be that debt collapse and global reset that we slide into. I think everybody is kind of waiting for timing in the markets is absolutely everything. You don't want to be a Dan Pena that sat on cash for 30 years, still waiting for it to happen. Whilst the opportunities are just, there's always opportunities in the market, whether that's long, short. But I think that there's a lot of people out there that are expecting or looking at this big crash, certainly largest yield curve inversion in a hell of a long time. This certainly technically could be what you've just looked at. I like the confluence there with the S&P. Technically, if this is to play out, you're potentially looking at it, and it could be coming a lot sooner than I think people are expecting. And I guess one of the flip sides to that, I'm mindful of time, Ben, so I won't keep you much longer. I've got to ask you about gold, because sometimes gold performs rather well in environments like that. Certainly we're talking about a crash. Could that be debt-based? If it is, I'm just throwing that out there generally, surely gold does very well in that kind of an environment. Although you can see some correlation between gold as a financial asset now. I don't know if are you seeing upside for gold whilst we're seeing downside for these financial markets? I don't know if gold's really something that, I'm sure you've looked at it for sure, as a kind of.
So if there is a black swan event like that, in March 2020, all of these assets started to correlate to a degree suddenly, yep. Right? So it might also be, if something happens, then gold might also be affected, but maybe only short term. But overall, but also actually I see gold close to a long-term top. Actually, it should run a little bit longer, maybe into the $3,000 region. I remember last time we talked about gold, I was quite bullish on gold, and it's actually certainly followed that Elliott wave pattern. Again, I can't remember where we were. I think we were sort of down here just before the breakout, and it's been followed, that forecast. My long-term outlook is there was a major wave four which bottomed here in 2015, and this is also now nearly a 5-wave move up complete. I think it still can go a little longer, but then I think we are close to a major top now, and it could certainly send it down maybe into the 1,000, 1,200 region, which would be an opportunity. But I see this as a very, very long-term upside impulse, which is close to completion now. So that's going to be a major crash. Not yet. I think there is still maybe even into, I don't know, second quarter next year, possibly. Difficult to say, but I want to see this, and you might not see it that well here, but anybody who's listening, there's a bit of a rally probably still outstanding in the current third wave of a larger fifth wave, which would be the larger top, then a larger fourth wave. That can take many, many months, probably even half a year, before we then go for a final rally. But then major top, I think.
We're getting confluence, Ben. I wish I hadn't have asked you now in regards to what could be on the horizon. Ben, I'm mindful of time. It's always an absolute pleasure having you on the show. Again, guys, I just want to reiterate this in terms of Elliott Wave and somebody's technical approach to the market. I think Ben is one of the best, certainly when it comes to applying it to the cryptocurrency space. There is going to be a link to where you can find everything that Ben does in the description. If you're interested in Forex, if you're interested in the equity market more broadly, Ben's got you covered. He also does courses. Many of you, we've spoke about Elliott Wave theory, might be interested in learning Elliott Wave theory. Learn from one of the best. Ben's got you covered in that department. Ben, it's been an absolute pleasure, and I hope we can get you back on the show sometime soon. Hopefully not a year or so, like it was till the last one. Hopefully sometime a little bit sooner. Thank you very much, Ben. It's been honestly a pleasure.
Yeah, thanks for having me. It was great, and I'm looking forward to the next time.
Thank you, Ben.